When it comes to investing, it is all about opportunity. Opportunities come and go. Obviously, over the past 12 months, we have seen a lot more opportunities in stocks than the 12 months prior. Before that, when we were in the midst of a bull market, one that seemed to go on forever, and it was great. Now we are stuck in the midst of a bear market. Again, one that seems to continue to chug along. However, there are some big differences in valuation when you look at some of these different stocks. For years, many run to Apple for leadership, and for good reason. But in today's video, we are going to look at why I believe there are better opportunities right now in the market, especially following this mini banking crisis we just experienced. And before we get started, whether you are a fan of Apple or not, do me a huge favor and click that like button down below, as that is huge for the growth of this channel. And with that being said, let's jump into the video. Hey everyone, Mark Rushin here. I'm a CPA and not a financial advisor. These opinions are mine alone, so please perform your due diligence before investing in any stock we mention in today's video. Also, before we get started, let me take a moment to thank today's video sponsor, The Motley Fool. The Motley Fool has tools, resources, and products for investors of all levels. Right now, if you go to fool.com/Mark, you could sign up to see their top 10 stocks to buy right now completely free. So to begin, I must say that I invest in Apple, and I think they are a fantastic company with a strong financial position. This video is in no way intended to cast negativity around shares of Apple. After all, they are a top 20 holding within my portfolio. However, what I am trying to say is that their valuation and 2023 outlook is not all that great, and instead I see other stocks that tend to be much better opportunities. That is why I created this channel after all, not only to educate investors about high quality dividend paying stocks, but to also make them aware of opportunities that I see in the market at a particular time. So with that being said, the stock I believe is trading at a very favorable price point right now is Bank of America, stock ticker BAC. As many of you are aware right now, unless you have been off the grid for a few weeks, the financial markets have been going through a bit of what I call a mini financial crisis. Nothing to the magnitude or the extent of the 2008 Great Recession that we saw, thank goodness. But we have seen a couple of banks, such as Silicon Valley Bank, which was actually a sizable bank that handled a lot of the tech startups that we have seen over the past decade. Without diving into detail and making this video about SVB, let's just say they had a run on the bank, which means depositors all requested their money out at the same time, and SVB did not have the liquidity to cover those requests. The Fed stepped in and ensured all depositors would be made whole. We also recently saw Credit Suisse come under pressure in recent weeks, and it was just announced that their rival UBS would be acquiring them. So crisis averted there. So a lot of bank news, but what this has done is put intense pressure on the sector as a whole, creating opportunities from big banks to regional banks. One of those opportunities, though, is Bank of America, which is a top 2 bank here in the US in terms of assets, trailing only JP Morgan. Bank of America has a market cap of $222 billion, but over the past month, the company has lost roughly 17% of its value during this mini crisis. The thing is, Bank of America also held these held-to-maturity securities similar to Silicon Valley Bank, except Bank of America has the proper amount of capital, meaning they do not need to sell any of those assets at a loss like SVB was forced to do. As of the company's latest filing, Bank of America has $1.9 trillion in customer deposits. In fact, Bloomberg reported that this mini crisis actually helped Bank of America, the business, not the stock as the financials fell, but the company saw $15 billion in new deposits come in after the SVB failure. Consumers are looking for more stability, which Bank of America offers. So given the fall off in the stock, Bank of America shares are now trading at a ridiculous valuation. The stock has hit unreasonable lows despite strong NII growth and a strong earnings profile, even with the wealth management and capital markets business struggling with this tough economic environment we continue to go through. B of A is expected to produce $3.43 to $3.70 in EPS here in 2024 and now trades at sub $28 stock price. The last time shares of B of A have traded this low was during a global pandemic. Using the midpoint of that guidance, shares of BAC trade at an earnings multiple of just 8 times. We are talking about one of the 2 largest banks in the US, and the world for that matter, trading at 8 times, which is more than half the multiple of the S&P 500. Talk about value. The stock could absolutely face more downside pressure, but you know right here, you are buying at multi-year lows and getting great long-term value. For comparable purposes, Bank of America shares over the past 5 years have traded at an average earnings multiple of 11.9 times, so we are a good 30% plus from that average level. Before we look at Apple, now let me tell you quickly about a special promotion over at Webull. Right now, if you sign up for a new account over at Webull and deposit any amount of money, they will give you up to 12 free stocks valued up to $30,000. Check out the link down in the description below. Now let's look at Apple stock, which tends to always grab the headlines. Over the past 5 years, they have traded at an average multiple of 22.3 times, which makes sense. Higher multiple usually comes with higher growth and growth potential. Great. However, in the near term, analysts are actually looking for EPS to decline by 3% in 2023 to $5.96 per share, which equates to a forward earnings multiple of 26.4 times. Right now, the S&P 500 on a historical level is trading well above its mean. And you see the company with the largest weighting within the S&P 500 is also trading well above its mean. So you get a higher multiple, declining income. How does that make sense? B of A, you get an insanely low multiple with 10% projected income growth. Again, nothing against Apple. I own Apple, very well run company. But right now, if I were putting my money to work, I would be less interested in Apple and extremely interested in Bank of America. As a reminder, the stock market is about opportunities, and right now I see a huge opportunity in Bank of America shares. Let me know down in the comments section below, if you had money to invest right now, would you invest in Apple or Bank of America based on valuation alone? Thanks again for watching. Please hit that like button if you haven't done so yet, and we'll see you in the next video. Take care.